I want you to think about this because I think this is important. This is how I want you to think. If something, remember I told you to cut everything in half. So if a stock has moved, right? Let's say a stock has moved from, let's just make it easy, 0 to 100. Where's the halfway point? 50. Now, the stock has moved from 0 to 100. It's now at 30, right? Can you lose as much as you lost? No. Does that make sense? Like if a stock has gone from 0 to 100 and 50 is the halfway mark, and you're now at 30, you've lost $80. Can you lose another 80? No. So what's better to do down there? If you like it, start accumulating. Use the declines to pick up cheap inventory. Because you're now mathematically at a place where your downside potential is smaller than your upside reward. Now, let's take it further. You got something that's gone from 0 to 100. The halfway is 50. It's now 30. Which means that you've got 30 points to 0. But what's the odds of a multi-billion-dollar organization going to 0? Not very high. So going to 5, not very high. Going to 10, okay, maybe, but 15, okay, now better. So now, okay, get to that price where I can maybe see another 50% from 30 to 15. So now you make 30 to 15 your accumulation zone, and you divide that accumulation zone into 3 parts. So the top third, you start accumulating light. You get into that middle third, you accumulate medium, and then that bottom third, you start picking up the size of your accumulation, and you accumulate in zones. You don't play like a freaking ABC kindergartner. Oh, I'm going to put everything in at this price and hope I pick the right price. There's a million prices out there, but I'm going to only choose one. That's not how you play. That's not how you accumulate for wealth, you know? You've got to accumulate ranges. You sell ranges and you buy ranges. But you've got to be able to come up with what's a range that has limited downside. And that's how you do it. All right? So if we take this to Bitcoin. Bitcoin's 69. It dropped to 36. All right? Now, could it drop to 0 from there? No. Back to 10? I doubt it. I doubt it. That's very unlikely. 20? All right, okay. 25 more like it. So now I've got my accumulation zone, right? I'm at 36 and 25. That seems like a good accumulation zone. So now I'm going to place orders down that zone. You understand? And I'm going to start off light at the top, medium in the middle, and heavy toward the bottom of it. That's how you do this professionally. You get to a place where you see limited downside compared to the upside, and then you create an accumulation plan. And you stage in. You don't have singular price risk. You have zone risk. And this spreads your risk out over a wider zone, which is a safer way to play the game.